All right, members only video. Let's take a look at this. There's a lot to digest with what's going on in the market right now. We're looking at the S&P 500 futures, and these are the March contracts that obviously expire in March. I'm taking a good hard look at what's going on in the market. We have a lot of, there's two conflicting forces going on here at the same time. So it's not easy to digest what's happening here, okay? But I'm going to dive into this members only video and give it my best shot, all right? So this is just a screenshot I took earlier, and I already marked it up here in the snippet tool. So let's look at this together, okay? So on the surface, before we talk about all this markings I have, and also I sent this in the nightly email. So if you're on the nightly emails, you'll see this attached to the email, okay? So first off, which is not really obvious here because this is like a 5-year chart. It's a daily chart, but it's going back. How far back do I have this? Let's see. How far back? We're not seeing all 5 years. We're just seeing like about a little over 2 years here, okay? Maybe 2.5 years, whatever it is. All right. So that's why you're seeing a lot of data here, because I wanted to get a bigger picture on the daily time frame. So what's not obvious is the certainty rate right here that just came in today. Okay, it's 30. I think it's 33 if I remember right. That's a pretty high number, guys. So it went from 5 days of zero. Then it went to 15. So this was the progression. I'm just gonna. It's not necessarily in scale here, right? Let's just do it. Like 3 days ago or 2 days ago was 15. And then it jumped, I think, to 30 or something like this, and then or 31, and then today I think it's at 33. Okay. So you had this is just a number set, right? For those that remember their mathematics, okay. This is just a number set. Okay, and I'll put another 0 there. So we had 5 zeros. 5 trading days, well, not 5 trading days, but just 5 days of zeros in the certainty rate. Then it jumped to 15, which is a pretty decent jump. But once we got up into the 30s, okay, there's just no disputing that we're going to get a market move, and it's going to be pretty big. It's going to be a big move in the market. All right. So that's number one. It's like I said, it's not obvious on this chart because it's a scale, but it's right there, and that's a pretty good bump. So that's number one. That one really sticks out to me. Right, and the reason why it sticks out to me, and I'm talking about it, is because here's this big move, and I'm inclined to think that we would get a change of direction when we get that many zeros in a row, and then we get a pretty decent bump in the certainty rate. Historically, way more times than not, usually means a direction change, but that's not guaranteed, right? This is a very fluid and dynamic, methodology in its infancy stage. Okay, it's not just concrete. It's not like it's not like there's not solid, absolutely perfectly solid concrete rules regarding the certainty rate. It's not like that. It's very fluid. It's very dynamic. Okay, but there are a few things I've noticed over time that more times than not we get a certain response. Okay, so I'm inclined to think we would see a direction change downward. All right. It doesn't give us the magnitude. It just, in this case, I think, that's a different story. We have to think about that, okay? So that's number one. Number two, we've had divergence dots on the Big Daddy here, okay? And probably, I could go through this, except for back in this period when it was just crazy. They were showing up like crazy because the market was being so manipulated. But since the bear market, which started here, you can see more times than not, we get divergence dots, and we get a reaction. This one wasn't so good, but the next set was. This two little right here just ended up chucking sideways. Okay? That's that right there. That scenario right there, this one. It has some things in common with these, where you were already above the 50, like we are now, above the 50. You get two or three, in this case 2, over here is 3, really solid divergence dots. Okay, the SMI was moving up, SMI moving up. And it just chucked sideways. It didn't come down, right? Now, there are differences in the fact that this is at the very beginning of the cycle. It's at the beginning of this cycle. Whereas this one over here is at the end, very end of the cycle, here and getting towards this cycle. So there's difference of where it's placed, and that's important. But there are some enough similarities where I'm paying attention to that, okay? So, but this is the only one that's, that makes me pause. Gives me pause to look at it because it's got some similarities. All the rest, every time we get these divergence, they've been bombs away. Look at that one, bombs away. This one, it was just one dot, chuck sideways. Here, pretty decent bounce, and then boom. So, if I looked at all of these, 1, 2, 3, 4, 5, 6, 7, 7 out of, let's see, 9, I guess. 7 out of the 9 resulted in a pullback. Okay, that's pretty good, right? It's pretty good. How many times is 9 going to 7? Anybody know? Come on. Not quite 80%, right? We'll just keep it simple. Not quite 80%, right? Pretty high number, 80%. So, really hard to ignore divergence dots when they show up like this on both. So that's number 2. All right, just bear with me. This video is going to be a little bit longer than the normal 5-minute videos, but just hang with me on this, okay? Because there's a lot to decompress here. So right now I'm just talking about everything that's looking like the market would pull back, and then I'll talk about what could drive the market forward. Because remember, at the beginning of the video I said there's conflicting data here. Okay, so let's take a look at this. This is called the reverse engineer MACD. I've been looking at this lately because it's a very powerful indicator. This indicator is really powerful. There's usually 4 lines in here, and I stripped out the 2, and it's 2 of them, just left the 2 because I like these 2 lines that I'm looking at. They're very helpful. So just keep that in mind if you want to use this on the TOS platform. And other platforms may have it too. If they have 4 lines, you can configure it and go in there, strip out the other 2, and just leave these 2, okay? So anyway, I see a pattern here, okay? And it looks very, very similar to this pattern. What am I talking about? So just look at this area right here. You get a crossover, you get this kind of this, I've talked about this before. You can think of them as bodies of water. I know it's small, but there's some space in here. And the space is drooping and going down. And this one's doing the same thing. They're a little bit different sizes, but they're very similar characteristic. Okay? They crossed over, and then they gave you this shape pointing down. Both lines, right? The whitish line and the red line curl over and point down, just like we saw right here. Then they crossed over. Red line goes up, and the lighter line goes down and starts to curl up. Same exact scenario. Okay, very similar. Okay, now let's look at the SMI. Comes from below the middle line, rises up, comes up and touches. Look what we got. Comes from below the middle line, comes up, and right now it's touching. As of this video today, which is Wednesday, February 8th, 2023. Okay, they're touching. Okay, so very, very similar scenarios. All right. So that's another point to look at. Let's look at this little cycle right here, this little yellow one back here. Okay, it's kind of just after the beginning of the big green cycle. Okay, so let's look at that. That's where it happened. That's where the big pullback happened. This pullback was like 200 points. I don't know, something like that. It doesn't really matter about how much, because we can see it came down to the 50, right, and pierced it a little bit and stopped. Well, guess what? We're way above the 50 here. Yeah, the difference. Yeah. Okay, and in both cases, the 50 is rising. 50 is rising. Now, let's look at this one. What's happening? Here's this yellow cycle. In this case, this yellow cycle is almost perfectly phased throughout all of this. It's like perfectly phased. It doesn't shift. Normally you get a shift, but in this case they're like perfectly aligned every time. It's a little bit unusual, but it also makes things simpler. So here's the beginning of this. The point I'm trying to make is here's the beginning of this green cycle going this way. Normally we get a rise in price. This what you'll hear. I'm not afraid to call out his name because he does a great analysis and a great team. He'll call this swamp. That's Steve Miller and his team. Okay. So they call this swamped, and he's right. It's a very swamped. There's this cycle here, this yellow cycle, and it's a very swamped cycle, meaning it's just all gangbusters. It's going to the moon, right? So normally what you would expect is a very small pullback, and then the next cycle, this yellow cycle would start, and plus there's a green cycle here, and it would be off to the races again. In this case, it would come up here and touch this 4327 or thereabouts or whatever. Okay, but there's an interesting configuration here. And that is, look what happened here. Just after the beginning of this green cycle, which is just what we're getting into now, you had all this chop in here. It rised a little bit more, and then this little cycle took over, and we got a nice, good, solid pullback. Yeah? That's why I got a question mark here. We're going to get the same thing? I mean, there's a whole lot of similarities here. Okay, so there's a whole lot of reasons why I say the market could pull back. I mean, it could pull back sooner than people realize. Instead of March, April, it could be happening like really soon, like any day. Okay? So that's just got my attention. I'm not saying I know that for sure, but there's a lot of evidence that says that could happen. Okay, that's the argument for the market could decline back down to the 50-day moving average. Okay? All right. I'm not going to tell you what that is because you can all look at your own charts and you can put the 50-day moving average on any chart and just look at where you're at today and then look at the 50-day moving average, and that's your difference, okay? So, all right, now let me talk about the flip side of the coin, which I kind of mentioned it already. Why would the market not pull back? Well, because we get a very strong cycle, right? At the beginning of a cycle that this thing was so swamped, it's such a strong cycle already, you almost get no time left in this cycle for a pullback, and all we might get is just chop. 9 times out of 10, if I looked at this, I'd say, oh, this is very bullish. Maybe even 99 times out of 100. If I saw this kind of scenario in this cycle, it's extremely bullish. You only get this chop right here in the cycle low. It doesn't show any tendency to want to pull back. I would say forget about it. This thing is going north. It's going to go up. It's going to finish off its little no nothing cycle low right here, and it's going to go up. Okay? I would say that like 95 or 99 times out of 100. You see that very common when you have such a strong cycle like the one we have now. So that's the argument for this thing would just absolutely go gangbusters and be bullish. Okay, so we got two conflicting, sets of data here. The cycles are saying, forget about it. This is very bullish. The cycles just are screaming bullish. If we just looked at cycles only, they are absolutely screaming bullish scenario. Okay? But there's a lot of other data that says the opposite. So, what am I going to say to you, my members? I think now more than ever, wait. Wait. And that's exactly what I would say. On the daily chart, this looks like you need to wait. You need to wait to make sure we know which way this thing's is gonna go. I will wait till it clears out from this cycle low and we get a sense. Does it do this 200-point pullback, or I'm not going to say 200 points, back to the 50-day moving average? I mean, obviously there's some opportunity there. That's a pretty good pullback, right? That might be a couple hundred points or more, whatever it is. Because I'm not looking at the live chart right now. I'm going to let you all do your own homework on that. All right? So there could be some decent trades there on a pullback to the 50-day moving average, but that might not happen. Okay? If you ask me my opinion, like the absolute safest route would be forget the pullback. Let it play out for the couple 200 or 300 points, and when it's done, go long. Just let it play out. Don't risk it. If you're the type of person that doesn't want to take any chances, yes, you're going to miss out on an opportunity for a pullback and some good profit. I don't deny it. If it happens, okay, you would miss out. But I think even if it does pull back to the 50, the most likely scenario is it'll pull back to the 50, down into here, okay, however many, couple hundred, 300 points, whatever that is, might go below it a little bit. And then I think once you get over to here, this green cycle and the yellow cycle together are going to shoot it to the moon, or at least it's going to get very strong. All right. So there it is. That, to me, would probably be the absolute safest thing to do if you're looking for the safe thing to do, okay? That's my analysis on everything I'm looking at here. This is fairly complex market right now. There's a lot of complexity going on because the market feels like it's right between bearish and bullish tendencies, right? Not an easy read. Not an easy read at all. Okay, so you can go back, rewatch this video, okay? Take a look at it, do your own technical analysis on top of what I'm giving you here, but that's my take. I think there's a decent chance for a pullback, but, you know, if you want to be safe, I say don't trade the pullback. Just chill, wait for it to finish. If it does pull back to the 50, so what? Let it go, and then trade long. All right? If you want to be aggressive and the market does start to pull back hard, which it could very well do that, okay, fine, do your thing. You can trade your options. I know there's a lot of options traders. Okay, you could trade that. All right, futures traders, whatever. I know there's ETFs that people like to trade, straight up ETFs, or their options on ETFs. Do your thing, all right? That would be for aggressive traders. All right, but right now, I cannot honestly say that I know for a fact this market is going to pull back, even though there's a lot of data saying it's going to do that. All right, okay, that's it. I know it's a long video, but I wanted to get it out there because I'm seeing some things here that I really wanted to convey to the members. Hope you all enjoyed the video, guys and gals. Remember, everybody, in this world right now today, you know what we really need? We need to love one another and forgive one another. Talk to you all real soon again next time.